Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. I'm streaming live from Costa Rica, and we are having a heavy wind condition here, and my power has been going out, and which means I lose internet and data. So please be advised that this stream may have a rough time, and if I drop out, it will recycle. Takes about 5 minutes, more or less. And I would appreciate your indulgence. If I do drop out, the stream should restart, and hopefully you will be patient and forgive for the infrastructure here in Costa Rica. Whether it's a monkey swinging on the vine or just the sun is shining, that's what it's like when you're in the jungle. So let's continue. Because of these data holes, I'm going to use a little different approach today. I am just going to do a very high level overview, but then I'm going to get into real time, and we're going to try that as something a little different. Hope you find it useful. General disclosure: all Bookmap Ltd. materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Remember, this is not a trade calling room, and if I get into this real-time narration to help you see microstructures, they are not trade recommendations. I do not do that because really the business of trading is about you identifying the fractal or time frame you operate in and then actually creating alignment. And part of this has to do with the rotations and the risk-reward ratio and those other elements that come together, which help you develop a plan. And we've been having quite a conversation this morning in the Trader Lab as far as what's appropriate. Somebody else's short might be a counter rotation for somebody else's long, that kind of a thing. So when you're in a community of traders, there are going to be traders on all sides of the trade. And there's not a right or a wrong. I mean, the answer to all of these questions is driven by metrics. There are some traders who are going to look for 10, 15, 20-point rotations. There's other traders going to look for 3, 4-point rotations. Some will be taking the counter trend. Some will be only waiting for the alignment for the, quote, directional trade. So isn't that an interesting dilemma for all of us? Well, the solution lies within yourself. And in the Trader Lab, it lies within understanding how the market works and then building out the business of trading. And then you basically open the store every day and go to work. That's the business. If you're interested in learning the business trading, this is what the Trader Lab is about. Hope you get something out of the stream today. And again, if I go down, it'll be about 5 minutes before I come back, assuming I do. And remember, these streams are available to everyone in the Bookmap Discord Trader Lab community. There's no cost. There's a link in the bottom of YouTube. There's 60 PDFs of these structured trades or trade structures you can download and reverse engineer. They're broad strokes. And then there's a full library of webinars that you can access, so all available at no cost. And the Trader Lab community, which is a community of like-minded traders, all different times in the business, developing traders, old dogs, all of that. And it's the leverage created in the community that helps create the support to build something that might have a edge that you may be able to actually build out a business. So that's the goal of Trader Lab. You're all welcome. Use the link in the bottom of YouTube. So let's see if we can get into this thing. By the way, here's what the trades look like, and you can access this using the link in the bottom of YouTube. Some of these are actual trades. Some of these are research. I work with developers at Bookmap on ideas. Some of these were tossed out the 30th floor window. Others have been integrated into tools that are now available inside of Bookmap. So I worked early on with the developers, and also I had a lot of requests from traders about what I was doing and why. So all that's available to you, and these are the broad strokes. This is a short as an example. There was a target. This is another target. You can see the short here. This is called the IBF. It's a short mean reversion trade. This is the mean. This is the target. This is the reversal. And then this is a long, and the long went in the north. That's all I can tell you about it, but there's all kinds of stuff, and there's no cost for all of this. Anyway, that and much more is available in Trader Lab, as well as that library in the community. Anyway, hope so that you guys get something from this. So let's get into what's happening right now. One of the things, I don't know if I can show you this. I'm going to try. All this is messed up, and it's all messed up because my internet and data was crashing this morning due to being in Costa Rica. Let me see. I'm going to drag a few things around here just to show you auction mechanics. You know, we had a big report this morning, and it came out at 7:30, and isn't that a wonderful thing? What do we know? Of course, we don't know, but we do know some things. Let me show you something here. And again, I will, if I crash out here because of the power in the internet, I will return, hopefully. This is a higher time frame, or something we call micro composite in the auction. I want to show you something here. Now, all this is posted in Trader Lab before the fact even, but that's not what's material. What's material is understanding how the market works, why it does what it does, and why, that's the thing, why it might do what it does. So this is 80 right here, and this is 60 there, and this is 50. Let's just keep these three levels. Now remember this, and this is today, and this doesn't exist when all this is going to happen. Let me just try to move this around a little bit. So we have this level, which is 80. We have this one that is 60, and we have this one is 50. So 80, 60, just want you to see the auction. 50, okay? And I'm only going to show you one trade, and I'm only showing you an idea so you understand concept. Concept is what is the market? The market is really participant behavior. And the thing we want to be thinking about, at least if you accept the idea of what this market really is, it's an auction. And the idea of the market is what's too high, what's too low, what's fair. And these rotations that we observe in the market are really the function of this price discovery process. So we get a report comes in. We get a report and it drives the market. And what happens is the participants, which is actually what the market is all about, not an indicator, it's the participant behavior. If a price point might have been too high in the past, can we come back and check it? Well, 7:30 was the report, and we come back to here. And it just happens to become the ETH high, but this level is on the chart from the last time we are up here. So we come up here. Now let's watch. Now, and this is messed up, don't forget, because of data breaches, but I want you to see the auction. So up here, I have absorption and a location. Location, location, location. This is a microstructure there and there. This sets up a short. Now, it's only if it's part of your trade plan. And where is support? It's 60. So if you took this trade, let's watch, you're attempting to go to here. Why? Because at the time, this was too high and 60 was too low. And don't forget 50. I'm just showing you structured trading, not anything more than that. And there's no precision. If you knew these trade locations, might you be able to do something a little different than what you're doing now? Now I'm going to show you, and again, ignore all of this because my poor little Bookmap, because of the data problems, I had to reset everything, dump all the data out, and it presents problems. And where I'm showing you these lines are microstructures. And again, I'm not going to go into them right here. I'll try to go into them a little bit later. I just want to show you this, okay? So location, ETH high. What do I consider here? A potential short. Well, I couldn't get long off that report, but I am looking. And so what do we do in Trader Lab? What we do in Trader Lab is we anticipate. We don't predict. I mean, prediction is nice, but I think you're better off going to a tarot card reader. What we try to do is look at what happened previously, and if a price was too high in a higher time frame or intermediate time frame, the chart I just showed you, then we might react to it. Doesn't mean it's the high of the day. That's not what this is about. In trading, it's about anticipating levels. So this is all on the chart before we get here. And I don't know. Could have stopped here. I know 60 is important, but I blew through it. So if 60 was the low side and 80 is the high side, then maybe I short 80 to 60. Is this logical? And by the way, post questions on YouTube. And remember, I'm in Costa Rica. I'm having a problem here with power because of there's high winds and, and the monkeys are probably swinging from the chandelier. So I'm trying to go here. Level and outside edge is here. So let's see what we're doing. Target is 60, remember. So short, and what is this pullback here? Short. Resistance is here. Let's look at it again. So this structure is a sell trigger in the Trader Lab. I'm going to show you a couple other little things, and hopefully I don't get in big trouble here because of the power fluctuating. Let's look at this. Now I'm drawing on here. I don't do this in my own world, but I want you to help you see structure and order flow. So what's going on here? Well, first of all, location, location, location. Who knows? And I don't have everything else here in the order flow. I can't show you sweeps and all kinds of stuff, but there's all kinds of phenomena going on here in order flow. So I got a passive seller here, and I've got absorption here. This seller is absorbed by the buyers. There's the buyer. Up here, I have buyers. They're absorbed by the seller. No way to know, right? Break low. So I either have a short here because I'm leaning against 80, or I have a short here and I have a little bit more risk, and my risk is up to 80. Does it fit? I don't know. It's up to you. Where am I trying to go? I'm trying to go to 60. So does the risk reward work for you on this? So 60 is my target. Now let's watch. So this short, and this is all in the Trader Lab, right? And I don't call trades. What I do is attempt to help traders understand how the market works, why it does what it does. And then the idea is to have vetted trade plan. So you are waiting for the trade, not chasing the market around. Do you chase the market, or do you actually know where you're going to trade? Not what the market will do, because we don't know that. It's what it might do and where. And if you knew that, would you be prepared for a short either here or here? Because if you're experienced, you'd be getting short here. And then you're managing your trade. When you're under here, this is support. You break below it, then you have no reason at the moment to think you're not going here. So now it's just trade management. And it's not broke until it breaks. So let's look. Here we have volume, VPOC migration. This says potentially too high. Now, if I break above it, I need to break below it to get to my target. Let's watch. And this is the RTH open. So here's what would happen. If you're using this, you'd get taken out here. If you're holding and your stop is further away, your target is 60. Let's look at the RTH open. And what was our other target below, you ask? Wasn't it 50? There. So now there's no precision in this, right? So in the Trader Lab, all this is posted. 50. Anyway, I showed you all of this on the chart. I just wanted you to see how you can anticipate behavior. The problem, of course, and it's not really a problem, it's just the nature of our businesses, we don't know. Is it going to get here or not? Well, it didn't. It only got over here. So what do you do with this? Let's assume that, let's go back to the RTH open. Let's come right back to RTH open. Let's look at the trade. Now, there's a couple of trades in here. These are Trader Lab structured trades. Now, you don't have to take any of these. You could be going, what's going on? Right? Just like me. So what do we know about our levels? We have 60 and we have 80. So I open here now, and these levels might be off because of the problems I'm having with my data. But generally speaking, yeah, this looks really messy. I can't really go through this because I can't tell if my data is good. Okay, I do know 50. That's all I know. So I'm going to jump ahead, and I'm going to come into real time now and try to stay with this. If you have questions, please post them. And I'm going to be repeating this because I'm in Costa Rica and I'm having substantial infrastructure problems here. Please give a thumb up for my efforts, at least, to be here with you today. So this is our 60 level. Let's watch. Now, I haven't seen any of this, so I got to keep my brain kind of focused. This, I think I had a request to see the chart again. So this is where the 60 and 80 levels are. This is the 50 level, which is my support, and I can come down and do whatever. So 50 is kind of important, and we already squeeze these guys out. Remember, the market goes up to go down. The market goes down to go up. The market goes up. And who did we squeeze out? Those guys, the shorts in here, the shorts in here, and 80 is our upside area, and then somewhere, somewhere. And the somewhere is the, I don't know. So it's not my job to know. I can't know, so I don't know. So, and then it's trade management. I don't pick the high. I let others do that because, it's always good to be able to say I picked the high of the day. And in my world, and it's just my way of trading, I think it's rubbish to predict. I do think you can align and you can anticipate where behavior might take place. And then subject to how you read the structure, you can get an alignment for rotations. And rotations, all triggers start out as short-term rotations. And then if one side is offsides, it can actually become larger. So all trades start in a short time frame, if you want to use that. And I don't think of time, I think of fractals. And then they can expand. And then in the auction process, there's a couple elements. One is, of course, the fractals. Think Russian dolls. The other thing is, where's the fuel? If the market gets lopsided, it rotates over itself. For example, if the market gets long and this price is too high, we can then come down. This yellow line is called the developing volume point of control. Notice where it is. It's at 80. That was too high. Notice if we get long structures in here, and I know we had a bunch of long trades in here from somewhere. Let me see where it was. Well, we had VWAP to VPOC trades here to here, I think. I don't remember them, but these are structured trades in Trader Lab. This sets up a structured short out of the Trader Lab, and there was mid reversion trades. So we've had a number of long trades to come back in here. Some traders in the lab are taking short trades. And it's not about right, wrong. It's about where's your trade. And this is the interesting thing about trading. Some traders are going to trade both sides. Some traders are going to trade one side. I always suggest for developing traders that you stick to a dominant side. And then if the direction of the market, overall direction changes, that you get in realignment and then only trade from the other side. And this is because my objective in Trader Lab is to help traders sustain themselves in the business, build a business, and then develop. You can't develop by becoming a whirling dervish. You need to develop discipline and only trade when you have an edge. And most traders think this is a video game, or they fall into the trap of FOMO, which is, oh, I could have done this, I could have done that. Well, and then they plunge in, and then the trade has already left the station. Let's take a look here. This is liquidity, potential outside edge. Where are we? Back at 60. It's not a long, it's a curiosity. We want to watch if we rotate here. That's one piece. The other piece is we still have our 50 open down here. We have over a 90% probability of taking out either the first hour's high or low. What do you guys think? Now, I don't know. You know? So the idea here is to try to be in alignment. So let me try to get my head back into this. So we have selling here, long liquidation. Let's look at this right here. This is a distribution of volume. This is a distribution of volume, and that's a distribution. What is a distribution? It's a consolidation. And this is showing us the volume for the whole day starting at RTH open. If this is too high, and this is coming from over here, and I break away from it, that's rejection. It sets up, this is called a low volume, a low volume zone. The market ran. This area up in here creates this outside edge. That's called a low volume node. Now let me bring you back here before it actually happens so we can see what we got here, okay? Let's look at this. Support is here. Notice, and this is a potential long in the trader lab. It's a mean reversion trade to here. So it's mid to VPOC, developing volume point of control. So these are structured trades in trader lab, there to there, there to there. Okay? Now, if you can't get through here, let's talk about the language. And what else is here? 80. So I have resistance here, and I have support-ish at 60. Let's follow this. Long to there. Now, is this worthwhile to you to trade? I don't know. 70 to 77, 78. And if you can't get, so let's look at the longs. Trigger here, back to there. Taken out. Trigger here, back to there, whatever. So you could be scaling and then basically putting your stop either under here or break even, subject to your plan. Notice right here that it comes back to the micro high volume structure. These are just triggers. Now what happens? Happens. That's what they say. What happens in Vegas stays in Vegas. So here, too high. Trigger is here. Support is there. Failure is there. Now it rips. When it rips, it creates something called low volume because it doesn't auction. These are auctions. Too low, too high, break high, rejection, test, up. Okay? When it goes the other way, now this is support and support's gone. So now we go down. Now let's look at the next way to analyze this or to at least relate to it. So if I get a rip and now I chop over here, I'm now auctioning this. So too low, too high. When I break high, I know this here is now rejected. It's too high. That's one piece. The high volume is now microstructure. Let me take you down in fractal, is here. So that's my resistance. It's right there because there's a little chop and it leaves. Now, if it comes up, I have this. And so out in this area. And what do I have down below? Well, I got my 50, right? So let's see what happens here. Where do I come? Let's just look outside edge. What is the outside edge? What is it created by? It's created out here, and there's the high volume. So this is an area for mean reversion, and I'm looking to come under here or here, wherever, right? It could be wherever, who knows, right? So let's look. Now let's look at the trigger. And this is Trader Lab process. I'm not saying it's anything anybody ought to do because what do I know? All right. So let's look here. So this is my outside edge. This is my break. I have a consolidation, and my location, remember, was up at 80. I'm under 80. All that's falling apart now. And now I have resistance here. And I don't know precise, there's no precision here. I mean, it could come do anything, right? But here's what I know. I know that price here is too high. I'm going to put a little mark in here so we can look at that. So I know in this distribution, this is an outside edge. It's out here. And I know when I get this out here, I'm at an outside edge of this distribution. Out in here somewhere is where I'm looking for a short, and I am looking down here again, right? So let's look at the trigger. Now, this is TraderLab. Now, I'm not saying this is any good. I have no opinion. I do have an opinion, at least for me, but it might be something you might find interesting. Let's see. So this is the outside edge. I don't know. Okay. Right here, I see absorption. Why? Buyer, delta, buy stops, nothing above. I don't know. Right here, going to the moon. What happens here? Outside edge, break low. You see the change in behavior? Now what? Maybe too high. Come here. Now what? Chop, chop, chop. What is this? It's microstructure. It's a micro high volume structure. Again, let's look. So I can't do anything here, but I have my rejection, and now I pull here. This is resistance, trigger, pull back here. So my short is here, my stop goes here, and I'm going for this. Because at 9:30, I have something called the initial balance. Oh, didn't even know. 1 second here. I don't know where I'm at. Let me just check things. 1 moment. I see we'd still be in that short. Hold on. Okay. Sorry about that. So the target on this, and this is not a trade recommendation, is there and there. So here's what happens. You take a short here. Your job right here is support. Now, where does this come from? Let's come back a little further. If I break down here, guys, I need to know this I below, if this is accurate or not. I cannot tell with my data. I don't know if it's been taken out. I don't know what's going on here. No, it hasn't. Okay. So this is still open. This is still a target. Where's the current low, guys? I can't tell. $52.50. Okay, great. Okay, this is the current low of the day. Thanks, guys. So this is a short. This is a short. You'd be risk neutral. This is a support right here. And let me show you where this all comes, how this might work. If we're using triggering structures to try to get aligned with what might be the current context, which is down, and I say might because maybe it is, and I mean it is in the short term. And so chop, chop, chop is an auction. Absorption is here. The sellers are here. The micro high volume, let's look to the right. You'll see it. I break away from this. Where do I come back? To the volume. So what do you do with this? Well, a couple possibilities. By the way, if you were short in this leg, it's right here. It's a trade management opportunity. It suggests up. So if I go up and come back from the other direction, what do I know happened here? I had buyers here and I have buyers here. So I would scale here. That's kind of how I use these things. And it's just an idea. It's not a recommendation. I don't know. So I don't think about it. Here we are. This is my scale, and it's always just the head. So for me, if I was trying to get short, to come down here, and I have over a 90% probability, past performance not indicative of future results, to get here, I'm going for that. Remember, it was our target from ETH, and I think we got pretty close to it. So let's just follow the yellow brick road. So anyway, that's it. So short here, scale, helmet, and now here's the following. We can rotate up, squeeze this out naturally, or we just rotate and continue to the target. That's it. There's nothing more to this than maybe and taking trades that are in alignment with what you perceive to be the context and condition in the market, and having triggering structures, risk management, and understanding market mechanics to get risk neutral. So the trade is short from there to there. You'd be risk neutral. Your stop could just stay up here, and that's all you got to do if that's your plan. The other part of your plan is subject to your personal plan, trade management. If you run in the microstructure, better chance to get taken out. If you, and you have, this is where metrics come in. If you are short, then you're going to, and you are playing statistical probabilities, then you're looking at this, and you're not going to micromanage. You're also going to deal with the psychological aspects of scratching or giving back most of these profits, open trade profits, if we take this out before coming here. Does that make sense? And can you, quote, predict which one? Are you guys tracking? Are you guys following? Give a thumb up in YouTube. If you got a question, please post them. Remember, I'm in Costa Rica with power problems, so there's a pretty good chance I'm going to disappear, and I will come back in about 5 minutes. So be patient, please, if you're in YouTube. And Trader Lab participants in the Discord Trader Lab community, you already know what this is all about. By the way, if you're visiting in YouTube, there is a link down in the bottom. You can visit the Bookmap Discord Trader Lab community, no cost. Download the 60 PDFs of structured trades. You can kind of get a sense of market mechanics. Trader Lab's about auction market theory, understanding how the market works, why it does what it does, how you might get in alignment at times, and then build out a trade plan or a business that has a statistical edge. And the outcome of any individual trade or market participation is random. So it looks like this short over here is going to fail. The outside edge is up here. Let's see what it does. So where would you, remember where the short was? The short was here. Scale is there. The stop is up above this area here. So let's watch. Not a trade recommendation. So if I'm short, I'm looking, this is my, remember, this is my outside edge. The other thing with this is there are stops over here. If I come up, and this, remember, is my outside edge. And remember, what do I have here in the order flow? I got the limit order book with 400 sitting up here. And there's a possibility we're going to trade into this or not. Do you know what it will do? It's a fair question. I'm going to give you the answer for me. I have no idea. So I can't do anything but kind of wish and hope, right? And cheer for the team. The team is short. The team will scratch. It's a winning trade. And even if it took a stop and had a loss, it's a winning trade. Now let's watch the behavior here. This is a sweep. A sweep, of course, has potential. It can move up, or right here, rotate down. Now, I know you're saying, well, gee, Tom, it can go up or down. Yeah, but sweeps are important. And let's see what it does right here. Liquidity in the book. You have limit icebergs executing. 82 buy stops came out. Thanks for playing. This is when your broker sends you the gift basket. And if you're really doing a lot of business, maybe even a dozen roses because your broker loves you. But let's watch the behavior. Remember, stops are here. Now, the other part of this is if we pop this, do you know what's next? Now, not what will happen. What's next in your plan? Where does the trade fail? It fails here. This is a weak high right now. Chances are we're going to come out here. So let's see what it does. I can't predict, so we're just going to see. Let's watch. Weak high, they pulled. This is opening the door. So right now there's I think, a good chance this trade's going to fail. But if my stop is sitting here, then it hasn't failed until it does. But they pulled, so that suggests it's like opening the hatch. So you have choices. Subject to your plan, you would exit this trade, or you just let your stop get taken up here. It's up to you. Watch. Yeah, you're welcome, Core. There's the hatch. There's the move. There's the squeeze. Out. We're still in an outside edge. Let's watch. Now, we want to watch the behavior still out in here. Let's just watch it. Now, if you don't have a trade, you just sit here and you're a tourist. You go, oh, that was interesting. So right here, subject to your plan, or at least I'm going to say, and I don't call trades, there's nothing to do. Go back in the Barca Lounger, hang out. So for me, this is a structured trade here. Scale, remember, there. Trade management or nothing, you break low. Now, and that's where your trade plan. Let's look at something else, just a little something interesting. So chop, 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 break low. This now here is support, becomes resistance, going to zero, right? But let's look at this. Resistance, 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 break high. Notice where it comes back. You see this? Now, this is all trade plan specific. There's an old saying in trading: support, resistance, support, break, break high, support, break low, resistance, going to zero, come back, resistance, 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 break high, support, resistance, resistance, break high. See? So, and this is where trade plan comes in. Well, what else do I know? 60. I don't know anything more. I don't really, truly don't. I don't need to know anything. It's, what do they say? It's only on a need to know business basis. Remember that? Haven't you heard that statement? It's on a need to know. How about I don't need to know because I can't know? So what I need to know is what I do when an event happens, not what will happen. That's what I need to know. That's the trade plan. What the participants think or how they behave, I don't need to know because I can't. So my focus is on what I will do. And in the business of trading, you need to know what you will do before it happens, not make it up as you go. So right here, when you're hitting this support, what would you do? Well, do you exit the trade when it breaks over this microstructure right there? Do you exit the trade when it comes back here or there? You see, what would you do? Now you're going to ask yourself, I don't know. Well, then you've got work to do, because the job of a developing, or let's call it a professional trader, is to respond, not to predict. It's very different than most of us think it is. There's so many traders that I hear over the years that are all about being right and predicting. And most of them don't stay in the business because their ego and their need to be right supersedes what this business is about. The business is about edge, and planning and following the market with and trading when structure and edge shows up. It's not about being right. It's about the overall metrics of the distribution of outcomes. That's the business. Now, I know we all have our psychological needs, and I spend a lot of time on those because the need to be right and to stretch your ego and all this kind of stuff and say, gee, I picked the high the day. I knew it was going to do that. No, you didn't. It might. Maybe's the only constant. But meanwhile, maybe doesn't pay the bills or give you potential for income. Maybe is the environment you operate in, but then you need to know what you'll do before it happens. So for me, and I'm only talking me, not you, if this is a short, then I'm out of my short, and then I have nothing going on up here now because I don't have a location. Now I know there's mid and VWAP, but let's look at what's happening down here. I have an edge or a statistical probability that says I have over a 90% probability I'm going to take out either the first hour's high or low, which is called the IB. What do you think? Is it going to be the first hour's high or low? What do you think? Well, if we found too high, maybe, and we're below 80, which was our over-under, I'm below 80, well, then, and 60 is down at the other end, and I'm above it. What am I trading? I'm kind of trading in between these areas. If I know 50 was a retail price, and it's open below me, and it was too low last time we were here, is it still too low? The longs are in the market, right? Where's the fuel? Didn't we already squeeze out the shorts? Maybe it's the longs who are going to get on the hook here. Now, I can't say how, if, when, not my job. What I know is the probability, and it's not statistical, it's basically more behavioral, is that we're going to take out either the first hour's high low, and unless we get additional buying above the first hour's high, there is a reasonable shot we're going to take out these longs and get to 50 and maybe dip under there or not. So if we know that, then the thing is, how do we trade it? And then we don't know what it'll do. How do you like that? So we know the shorts are going to have stops at the mid, and we know we have the VWAP. We also know we have the retail price up here. We also know now we're coming across the range and we're not respecting these distributions. We're pushing through. For me, and I never make trade recommendations because I operate differently than, we all operate in our own thing. We do our own thing. For me, I have no trade. I am waiting to see what happens to the shorts. Because right now, I know the shorts are getting squeezed. If the shorts get taken out and it's only shorts getting squeezed and not initiators, then the potential exists that the shorts are coming out and there's new longs coming in, and these longs can become sellers if we come down. A reaction at the mid and here is typical because typical retail traders are somewhat mechanical. And remember, in the casinos, the gamblers get paid. Doesn't mean they won't get paid. So I just have to wait. I don't have anything here. I'm just a tourist at the moment. Let's watch the microstructure and see if we can read it together. And post questions if you have them. I suspect this stream will not be available in the Bookmap Discard Trader Lab. Actually, it will be, but it will not be out on YouTube because of the data problems, and that could not go over to developing structure because I have all the data that was missing. But those of you in the Bookmap Discard Trader Lab community, if you are interested in this, so let's watch the behavior. We anticipate potential selling at the mid. It's not a trade for me, and it's also not a recommendation anybody does or doesn't do anything. It's just observational. Let's watch the behavior right here. Let's look at the microstructure right here. This is a microstructure. And here's a trigger. I'm just going to show it to you. It's not a trade. It's not a trade I would take, but I want you to see something here. This is the passive side. Aggressors are here. We got icebergs here. We have buyers up above, and we break low. We pull back here. This is just a trigger. It's nothing more than that. Stop will go here, and everybody on the planet has their stop here and there. So I don't have a trade here. I just sit and observe it. I narrate it. Let's watch. In the Trader Lab, you'd be building out a portfolio of triggering structures. So, and the idea of this, I don't use any indicators, is to develop an understanding of what it says. Order flow is language. Can you speak the language? And the auction is also language. So what we're doing, at least attempting to do, is integrate pieces. There's a thing called context, which is what's the market doing? Is it going up or down? Okay. Is the trend up or down? I'll pick one. It's up or down based on your time frame or fractal, right? James, if you're looking for my settings for the stops and icebergs and all my settings in Bookmap, go to the Bookmap Discord Trader Lab community. Use the link in the bottom of YouTube. They're all posted in there. The PDFs core, use the link in the bottom of YouTube. They're pinned to the top of the chat, as well as a library of webinars. The Bookmap Trader Lab community looks something like this. You can see a lot of stuff's going on in here. Charts, screenshots, discussions, all kinds of interesting stuff. You know? So you guys can all come and visit Trader Lab. There's a lot of stuff going on. And it's a community of traders. And by the way, it's not about right, wrong, long, short, I'm right, you're wrong. Nah, we're way past that. This is a serious community about the business of trading. The other thing that's so cool about trading is it's your plan and your psychology. You know, think of it like this. Where's your groove? You know, think of it like dancing in a way, dancing with the market. How do you dance with the market? Well, some are going to trade short term. Remember this? This was a trigger, but this isn't a trade I would take. Why not? That's what retail traders do. And there's a saying that I've coined. Think like a retail trader. Don't act like one. What do? They sell the mid. Why would you sell the mid? Why? Because everybody else does? And what about the VWAP? Would you be selling the VWAP? Everybody sells the VWAP. Would you be selling the VWAP? I don't know. Would I be selling the VWAP? I can't tell you. But what do I know up here? This is the retail price in the developing time frame. So here's the possibilities. I can come here. I got some blocking here. I can get a rotation here. This right here might be material. Now, I don't mechanically do anything. So I just would sit here and I'm not calling trades. Remember, why? Look what happened here. And look what happened here. What's different between this and this? Do you know? Let's look. I got liquidity here. I have a sweep and absorption. That suggests a counter rotation. This is sweep. This is important. Those little green dots are sweeps. And sweeps often set up reversals. If I'm in the Trader Lab and I have liquidity and I have icebergs, this is stop an iceberg detector. Now, would I take this trade? What do you think? See, I don't call trades, but I want you to see order flow. So I'm never going to call a trade in here. You don't need to take my stop. But what is different? Mechanical traders here. There's the rotation. Their stops are going to sit here, them and everybody else. We come up to the VWAP. That's the next location. Then, but look, here's what's different in the order flow. Let me open this up for you, because this is really how Bookmap really gives you potential edge. And I said to you, I might not take this trade. and then again. See what I'm saying? So I'm never going to call trades. Not here. I do post trades. I don't call them in the Trader Lab, but most of what I do is designed to provoke thought. Because if you think about it, you'll start drawing conclusions. That's education. You don't need somebody calling trades. You might as well just go to the movies and write a check out to somebody that trades your dollars. This is the sweep. There's the absorption. This is now order flow. Here's the liquidity in the book. 18 buy stops. Right here. Right here. Now let's look. Microstructure. I'm just going to take you into this in a microstructure. So this is a location, VWAP, and this is the behavior. So right here, I don't know, of course. So let's watch. Break low. Now, what is this? So right here is volume. No clue. Break. More volume. Break. This sets up a trigger, and your resistance is above here. Then it's up to you. You can put the trade on, or you can put it on wherever you want. It's all up to you. Where are we here? Well, there you are. Again, just a trade. Now, what I'm going to ask you guys is, can you see structure? Now, what was this? Support, resistance, triggering. This is support. This is potential resistance, and resistance is up at these high volume areas. Let's look at the structures in here now. And if we get rolling, where's our potential targets? Again, we have to be conscious of 60. We need to be conscious of the initial balance low. Same trades from a different location, and this. So targeting is still down here, if that's your inclination. And all this is the same trade, so the same statistics from a different location. And I'm not calling trades. I'm helping you understand market mechanics. Does this make sense? Please give a thumb up in YouTube if you're getting something out of this. So let's look at this thing. So how do you get in the trade? Isn't that the interesting question? Suppose you're like me and you can't predict. Well, where's the locations? Well, we know the mid. Well, let me put it this way. The mid, potentially, it's just a trap, because that's retail trader behavior. Oh, sell the mid mechanically. Up to you. Me, not so much. So then I'm going to look out here, and I know I have the VWAP and I have the potential, remember, to come back here. So I have two areas to observe, here and here. So I come to the VWAP. This is my first location after the mid. I do not trade the mid based on where it's located. I won't go into any more detail on it, but this is not my trade. This can be my trade, and out coming up higher can be my trade. So here I have all the pieces, but here's my volume. That's what this is in the auction. Is buyers are here, sweep is here, absorption, which is this, is here. As far as I know, I'm going to keep going. Then I chop. This is these buyers. Let me show you again. You should be taking screenshots of this if you're in Trader Lab, because this is a trigger. Now, I don't know it's a trigger until buyers are here. Wouldn't we think green delta going up? Well, what is the delta? Buy stops, aggressors. But I have passive sellers, absorption, and the sweep. So right here, it's a suspect. That's all you got. And I got volume there. So that's micro volume. And what does volume represent? Shopping. if this price is too high, which I don't know, and then I come here and now the shoppers are here, chomp, 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 micro, and I break below it. Now let's look at the language. The buyers are here, the buyers are here, the sweep is there, everything you got here, but my buyers are here. My buyers are there, passive buyers and passive sellers. So micro support, resistance. You could see it here too, by the way. Volume is here, break high, buyers are there. Break high, the sellers were here, under the bus, buyers above. Buyers here, buyers here, buyers here, buyers here, going to the moon, buyers here, buyers here, buyers here, buyers here, sellers change right here. Can you see, first of all, question, do you see the change? So now we have change. So right here I have too high, passive sellers, sellers in control. Test, micro high volume structure, break, sellers in control, sellers in control. This is a short. If you get short here, wherever it is, your stop still has to go here. So let's look. Now where's our resistance? Isn't it there? Why? So too high, volume is here, break here. What's this? Let's come back. Where did that come from? Didn't it come from over here? Break. Here, too high, break, trigger, short, support. What's that? Volume, break, watch. Where do I return? Volume, short, continuation or trade management. Follow. This is Trader Lab, and it's all random, right? Are you guys with me? So what do? You short, you scale, you manage, you come above here. This is resistance. Or you're out here. Or watch. So let's just watch. Now, if you get taken out, what are you going to do? Still two-sided trade. For me, if I take this, I get paid. I have this. I have this. I know my stops are going to be here now. If I can't keep going, I have buyers here. I break. Right here is volume. It's resistance. And now the trade's over. Are you going to shoot yourself or are you going to be okay with that? I don't know. I'm just asking because I'm okay with it. Because I can't predict. So I just get the trade. I put it on. I manage the trade. I get risk neutral. We got to watch the behavior right here. Let's watch the behavior. Back at the mid. I have buyers here. I'm going to watch this liquidity over here. I'm at the mid. I don't like to trade the mid, but it's important now. Let's watch. I'm not calling trades. Watch the behavior. Watch the structure. Sellers are below. Passive sellers are here. Buyers are there. Watch right here against these buyers. These buyers are going to come in here. Or what are we doing? Watch the behavior. Not a trade recommendation. Read it. Narrate it. What's it say? What does it say? Just follow what it says. Watch the behavior. Follow the language. Sellers are up here. These guys were absorbed. This is the fight. Right here is the fight. Right here. Just read it. Don't trade it. Read it. What's it say? I'll tell you what it says to me. Sellers are here. Buyers are absorbing the sellers over here. It's a shootout at the OK corral. That's what this is. One side is going to press the other side out. And we, or me at least, I don't know which one. So that's it. So if I don't know, if I was to put a trade on here, I can operate with a very tight risk. That works for me. If I get stopped out, I go, okay, that's not the right place for this specific opportunity. That's as deep as it is. It's not more than that. It's a fight. You see the fight? So now the buyers are getting over these passive sellers. So there's nothing here. Or if you put the trade on here, guess where your stop is going to be? It's going to be right there. Is that okay for you? Doesn't have to be okay for you. So let's watch. These guys pulled. Absorption is here. Sellers are here. They're being absorbed. Now, here's the next question. If the sellers are here and the buyers are here, who's got the energy here? The buyers absorbing the sellers? At the moment, if I break high, it's telling me that the passive buyers are going to take the market higher, potentially. The thing with this is we don't know how high or where or what. Now, we might come back here, you see? So let's watch the behavior. Does this make sense? Any questions? How we doing in YouTube? Please give a thumb up, a like. Also remember, if you're interested in what's going on in Trader Lab, there's no cost. It's a community of like-minded traders who come together. It's about the business of trading. It's about building trade plans, developing a statistical edge, only trading with vetted or structured trades that give you a statistical edge, understanding that the business of trading is a statistically based business. It operates the same as casinos do in the sense of only playing games like in a casino that have an edge. They don't make them up. They don't change the games. They just play the games with the edge and they don't do anything else. Retail traders are playing a video game, making it up, responding to emotional states, and I can assure you the casinos are not emotional, whether they pay a gambler or the gambler pays them. The only way they get paid in the casinos by playing games that have an edge and not making them up or changing the games, even if they pay a gambler. In fact, I did a lot of, there's a library of webinars in the Trader Lab, and you're all welcome to come visit Trader Lab. There is no cost. You could use the link in the bottom of YouTube. This is Trader Lab. All these are pinned in the Trader Lab community. This is the primer webinar. It's about an hour long. It's got over 30,000 views. And then a lot of topics here. Are you a trader or a gambler? Why most retail traders using indicators fail. Trapped in Trader Groundhog Day. That's all of us doing the same thing but getting the same results, even though it's always random and we always have winning trades. How to trade high volatility reports. Day trading inside higher time frame. Trading gaps, advanced user sessions, and a lot of other things here. Doing deep dives into auction market theory. But the real thing, I think, is about you. It's all about you. What are you doing? And are you just doing the same thing? Does it have a statistical edge? Or do you want to understand this business? Most traders have a fantasy of this business. They don't really know what the business is. I didn't know when I started in 1980 because nobody told me. And by the way, all my friends were floor traders. There were no off-floor traders, and there was even no technical indicators. They were in their infancy. And I've kind of come through, you might say, every iteration of the next best thing. And there's been many next best things in the indicator world. And as long as somebody can create something and market it, retail traders are going to be eager to buy into the fantasy of the Holy Grail. So maybe there is a Holy Grail. I don't know. Since I look for it, I decided no more. How about you? You still looking for the Holy Grail? By the way, if you have the Holy Grail, come to Trader Lab. This is the indicators, This is all the stuff that's in a charting package. I have a very high tier charting package, but it's got the same stuff. I don't use any of it. And I've been showing this. Alexander Elder, he wrote a book. He's got the force index. Of course, Fibonacci, for all you enthusiasts that like to have certainty. Gann, Heikin-Ashi, very popular. linear regression, acceleration, slopes, math lines, adaptive moving averages, money flow. A lot of that. A lot of money flow. Where's that money flowing? Potentially out of your pocket if you're trying to find the right indicator mix and time frame. Of course, that might not be you, but then statistically you're an exception. Regression, relative vigor. What is that? I'm interested in that. What's the relative vigor? Slope, sine waves, stochastic system, stock split finder. Well, that might be useful if you trade that. By the way, stochastics, I shared an office with George Lane. He created stochastics. I can tell you, I went down the merry path of oscillators. I thought the holy grail finally did show up. Sweep. Anyway, if that's what you're doing, we've all done that. And that's great, except there's a reasonable chance that even though you have winning trades, which we all do, by the way, and if you had nothing, you'd still have winning trades, but you're not progressing. You're waking up in Trader Groundhog Day. I did a webinar on that. Because everything I discuss here in the Trader Lab is really based on my 45 years of trading. And both as, starting out sitting off floor when nobody was sitting off floor, and then developing into a fund manager and the rest of it. And I went through a lot of wear and tear and frustration, not understanding why what I did, which was logical to me, didn't work. And the reason was I believed things that had nothing to do with the business I was actually in, but I was using logic and the experience I had in the outside world, persistence. And all these indicators are here. They, if I get the right indicators and I can fit the right time frame, I'm going to be able to make, consistent profits. So I would get in, I'd get runs of profits and, the same thing you guys probably get. But it always broke down. So I built systems so I could optimize it, which is a very nice term for curve fit. And that always broke down also. So I had a actually optimization schedule I had to build. I did all that. And I still ended up with a deteriorating curve. So that didn't solve it. So I kept searching, going, well, I'm missing something here. What am I missing? Well, gradually I had to deconstruct what I had built. And that was very hard to do because you don't want to maybe even admit to yourself that you can't retrieve or extract value. So it was very hard for me to not keep my indicators as part of my process and then try to add more because I was constantly trying to create more certainty. But what I was actually doing was creating more conflict, ambiguity, and noise. So I was actually creating more problem in searching for a solution. And at some point, and I can't remember exactly when, probably mid-1980s, 86, 80, right in there, I started with the market profile. I learned it from Peter Stottlemyre, who created it. He taught it to me. And I said, I'm going to make this really so much better. I don't know why he doesn't use indicators with this thing. So then I had all my indicators and I had the market profile. And that didn't work. So I'm just going to tell you, it's not there. There's no magic 8-ball, James, if you are interested in the Trader Lab, go in there, use the link in the bottom of YouTube. You've got to confirm your username and email address so you can get into Discord server. Just go to join, and then you'll have access to everything, all the additional education, stocks, options, crypto, order flow, with a high tier tool like Bookmap. And then you can access Trader Lab community and build a business if that's your interest. Trader Lab is not a shortcut. It is actually education. It's an advanced degree in trading. There's no shortcut to this. You want anybody, I'm not just speaking to you, I said, if anybody wants to be in this business, roll your sleeves up, be prepared you're going to have to change your beliefs and your thinking, because most retail traders really are very similar because we're applying our experience in the outside world to this world. And I can assure you the casinos don't do that. And they're very successful. So if we can take a process that's proven, and that's gaming. So we already have a business model. We're not making it up. Now, how can we adapt what we do here to a proven business model? And that's structured trades. In other words, vetted games or structured trades. So we only trade or interact with a game that has a statistical edge. We don't control the outcome. We control how we play the game. So you don't need a lot of these structured games or trades. You just need to only interact when you have a statistical edge. Does that make sense? And if you only interact with a statistical edge, you're not being triggered by emotions. You are managing emotions because you've taken your fear and you are converting what you fear, which is pain, loss, all those emotional states, not being right, dealing with your ego, which has no place in trading except they still exist. The way to manage them is only interacting where you have something tangible. Taking something nebulous and random, in other words, 100% uncertainty, how do you convert that to a certainty? You cannot, but you have to operate in uncertainty. So where does our control come? It comes from metrics making randomness tangible, not predictable, tangible. Is that logical to you who are visiting the Trader Lab today? If it is, use the link in the bottom of YouTube. This will potentially, if you do the work, change your experience and change how you view this business and potentially change what you're going to do about it and give you the opportunity. And past performance is never indicative of future results, to change your outcome and maybe have a business and develop a career. And it doesn't work for everybody because no matter what you do, not everybody's suited for this business. It's going to take more effort than you can imagine because you are pushing against primal wiring, which is fear, hesitation, seeking confirmation, certainty. And that's why you pile on the indicators and time frames. It's okay because we all do it and we've all done it. The difference is understanding why, which is psychological, and understanding what most retail traders do and why most retail traders fail. If you can learn from that and you can take your own experience or others, doesn't matter, then ask yourself, should I expect a different outcome by doing what other traders do if they're failing with it the majority? It doesn't mean you won't succeed doing it. Not for me to say that, because you might be the exception. And I hope you are. But statistically, we know that retail trader outcome is terrible. And why? Because they're all doing the same thing. So it might not be realistic, even though you're an exceptional person, I'm sure, to anticipate a different outcome because you're trying hard. That's Trader Groundhog Day. And if you visit Trader Lab, you should be watching that webinar because we are all come from the same place, walking in the same shoes. The thing about it is, can you benefit from your experience and get a yield on it? I call that trapped equity. I don't talk about it much even in the Trader Lab. You make an investment of time and dollars or whatever, data, software, brain damage, and maybe lost equity. Yet you keep doing the same thing. And because there's random success, your belief, and I'm using the term belief, is that you just have to make it better, right? It's a logical thing. I understand, me too. But what I found was that didn't mean it would get better. It just meant more random distributions of random outcomes, but no statistical edge. Gamblers win. That doesn't mean they're going to win overall. Does that make sense? The thing about the market is, let's look at what an indicator is. And I probably sound like somebody who's against indicators. I'm going to tell you I'm not. It's that traders never learn to understand how the market works. They're dependent on indicators to tell them what's going on in the market, like Google Translate. Do you want to speak the language of the market, or are you going to depend on conflicting indicators that are lagging and who knows what to interpret the market? Who has an advantage? Somebody who can read the market and operate here, or somebody who's waiting for something to tell them that we're going to have a rotation after it's already happened? Now, we all take stops. You're not going to miss out on that. Cost of production and overhead. But would you know right here at 80 is an important level? And would you know at this level, or even up here, that there might be behavior? Would you know that even though it's not a trade recommendation and we're drifting, why, if we come outside, that we might have a reaction? Or would you know there's no trade and you're just sitting here sipping your mint julep? Would you know why this level is material? And would you know why you might see what's happening right here? Now, it's not a trade. It's just a question. Would you know why? If you're in the Trader Lab, you know why. You don't have a trade here also because there's nothing going on here. But the fact is, you would know why this is important. You would also know why this is important. So let's just watch it right here. We don't know what will happen. I don't have a trade here, and even if I did, I wouldn't be talking about it. I am talking about a level. And I'm talking about why we had a short in the ETH right here, which I showed you at the top of the stream, and why 60 was the target, which I showed at the top of the stream, off of this level, and why 50 was our target coming down, which is there, which we haven't gotten to. Why didn't we get there? Here's the answer. It's random. That's the only answer that there is. Why do gamblers win in the casinos? Because the cards coming out of the deck and the way the gamblers play the cards is random. That's why. Why do you have winning trades, even if you just threw a dart at the board? Because it's random. So can we operate in a 100% random environment? How do you do it? Because our nature is to avoid the saber-toothed tiger, which means create certainty. That's what you're looking for. That's what we all want. But how about you're in an environment where it doesn't exist? What would you do about that? It's a question. You want those answers. And while nobody can guarantee it's going to solve the issue for you, because if you've been spending as many years as most other traders have searching for the answer, maybe you're looking in the wrong place and you're going to have to undo your beliefs that might not be in alignment with this actual business that you're in. It works in the outside world, but this is Mars. You're in a different environment. How can you operate in a foreign environment like you would on Earth? I mean, I'm just trying to give you some ideas of things to think about. So I don't have all the answers. Nobody does. I'm asking you to question because maybe you can find better answers for you in the Trader Lab or someplace else. Doesn't have to be here. But I think you'll find in the Trader Lab that this is an advanced course, if you will, or community, unlike most others you're going to come across. Also, there is no cost for it, and while it is still available, and it is not, I can assure you, going to be available indefinitely, and I'm not going to be doing this. I'm a full-time trader, so when I do this, I am not trading. I don't multitask, and it's not smart. By the way, when I'm trading, I don't talk to anybody. I don't check my email. I'm doing nothing else. I'm in a flow state, and if I'm not able to get in a flow state because I'm reading a language, I don't use any indicators, then I'm at a disadvantage, and I'm now not in a suitable frame of mind to be trading. Is that in your trade plan? Do you ever walk away from the monitor and then come back and you say, oh, I'm missing the trade, and you just hit the button? You ever done that? I've done it. I don't do it anymore. Do you do it? That's FOMO. You have to get familiar with your emotional states. And in the Trader Lab, we have a name for this. It's called Jekyll and Hyde. Hyde's the lunatic. You heard the story of Dr. Jekyll and Hyde. Hyde was this unbridled emotions. Inside of us all the time is both states, logical, intentional one, and then the maniac. The lunatic is the fight and flight reptilian brain. It's part of us. And logic and intentionality does not overcome that stimulus. The stimulus is managed, but it is never removed. So that's why, if you're sitting in a trade here, just hypothetically, if you're short, you're depressed. Now you're euphoric. If it goes up from, you see what I'm saying is, by the way, remember, where's our location? Not a location for a trade. It's a location to observe. Just saying, right? Let's see what it does. And I don't have any trades. I'm just cruising with you. Final questions, guys. I got about 10 minutes, and I never know if the stream's going to drop out because I'm in Costa Rica and I've been having power fluctuations. So if you got them, please post them. If you're in YouTube, please give a thumb up. This stream is only going to be available to Bookmap Discard Trader Lab participants to reverse engineer and review. It probably will not be public in YouTube because of the data problems today. So it's been very difficult for me to do my job the way I like to. So right now, the market is in balance. We have a high probability of coming out either the first hour high or low. I couldn't tell you. I know 80 is an important level, and I know the market is long. I don't think it's, and I have 50 underneath. 50 was too low. For me, it's kind of a coin flip. I think we just have to kind of try to stay in alignment with it. I have no opinions. And for me, at the moment, I would be in a short-term rotational trading pattern. I do think it's possible to come out the bottom, but it doesn't matter. You know, remember, there's nothing, this is not a business of predicting. It's a business of alignment. So the fact that we're sitting here is almost like a neutral stance. And I know the market squeezed out the shorts, and I know the longs are in here. So if I've squeezed out the shorts, who might be on the hook? Well, I just trade what I see. So I'm not here to predict, so I can't. I can tell you that I'd be short right now. Only trading rotations. And this is a function of your skill set and trade plan. You could be short, you could be long, you could be in a Barca lounge just having your pizza delivered. What's the answer? So for me, this is my level to lean on for shorts. This is a short trigger. I have to watch these levels down here, and all we might be doing is out here, back to here. So my short from here is to there. Then we have a structured trade that is called VWAP to VPOC. So I can come back here, or I'm going to get my absorption here, bounce, and then fail, or come back here. These are the things I know. I don't know which one. So if I take a rotational trade, I'm going there. That's all I can tell you. Then it either is going to fail, and that's okay, or the longs are going to get abused. So I leave it at that. Or here's the other part. I could just be short there to there, and the trade's over. That I would call that kind of a scalp, you know. For me, this is a real short-term trade, you know. So, but that's where my target would be for a scale. Then I'm going to get mechanical buyers, and this is mean reversion back to here because it's balance. If I can't fall out of here, I'm coming back here. If I fall out of here, then I'm going to get down into here and maybe roll down. That's as far as I need to go to understand how to trade this rotation. So I can be short from here to here, In the Trader Lab, I can also be long from there to there. You see what I'm saying? Both are appropriate. Both would be correct, or either one or both. So we can watch this. I got 5 minutes. Please give a thumb up in YouTube. Hope you got something from this. And I appreciate you all visiting the Trader Lab. If you find this interesting, if you're interested in finding out more about the business of trading and career plans, that's why you have an open invitation. In addition, there's a lot of additional education, stocks, options, crypto, order flow with a high-tier tool like Bookmap, algorithmic behavior, market maker behavior, swing trading, you name it. It's available. Why would this be a short, right? Why would I see a rotation here? What happens if I get below here? Can you see why I'm thinking short? And do you know what's interesting about that? There's traders in Trader Lab who are long. And it's not right or wrong. It's what, at the moment, gives you risk management opportunity. Where is it? How do you manage your trade? And then what happens? That's the right answer, not what will happen. So where are you looking for the answers? Is it about being right, or is it about trading a plan that gives you an edge? Remember the business you're in, gaming. Are you in the gaming business, or are you focused on being right and looking for confirmation? That's not the business we're in my opinion. It always was the business I thought we were in, but it's not the business. Wrong business, wrong solution. Maybe different solution that aligns with the business you're in. If you're interested in the business, come to Trader Lab, and maybe you'll learn something. And maybe you'll be able to take something away that helps you on your journey. Hope so. Please give a thumb up. Now, let's look at this. The short is here. Scale is here. It could come back here. This is called mean reversion, or we break below and we come down. The mid is here. We didn't quite get to it, and all we might do is mean revert. So for me, if I take